guy's idea to IPO. We've been holding events in Silicon Valley for many years. We hold events multiple times a week from San Jose to San Francisco. We always have a busy calendar of events. I'd like to highlight just two that are coming up that are worthy of note. So tomorrow, Thursday, July 20th, we have a fireside chat with Vinod Khosla in collaboration with Commonwealth Club. That's at Palo Alto JCC. Tuesday, August 8th, we have a panel discussion, latest innovations in AI. That's at the beautiful campus of the College of San Mateo. So check out all the details for those events and all of our events on our website, ideasipo.com. We were launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 50,000 members among all our meetup groups in the Bay Area. We've completed over 1,763 events. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley. Bar none. Is that all I got? Yeah. All right. So if we're the most active, most prolific startup event organization in Silicon Valley, and Silicon Valley is the global center of entrepreneurship and innovation, that would make us the most active, most prolific startup event organization in the entire world. It's a little better, but that's okay, I'll take it. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that's practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem. It attracts people from all over the world who come here to do great things. In fact, I'd like to know who here is not originally from Silicon Valley? Everyone on the panel and me. Who here was born and raised in Silicon Valley? Just you three guys? Okay. Well, welcome. So it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. Whether you were born and raised in Silicon Valley or you just arrived last night. So to that end, in addition to our multiple content-oriented events throughout the week, we have social events on Friday nights every now and then. The host for those events is one of our team members, CJ Terrell. I'd like to have CJ come up and tell us about those events. So here for CJ.
Hi everyone, I'm CJ. So as Rob was mentioning, we have these social events. Typically they're held at the Hyatt Regency in Santa Clara every 2 to 3 weeks. So really cool ways to kind of get out and meet the community. However, we do have a special event that's coming up on the 28th, which is about a week and a half from now. So it's going to be held at a location called Boot Up Ventures, which is an accelerator in Menlo Park. And so this will be a very fun event to go out to. The ones I've hosted in the past have had a pretty consistent theme of really people that are energetic, new to the game, or those who've already exited their own startups, and just looking to get to the next level. The one on the 28th is going to be no different, and I do highly recommend you come out. It's going to be from 6 to 9 p.m. And again, at Boot Up Ventures, which is in a beautiful location in Menlo Park. If you have any questions, please let me know after the event, and in the meantime, hope you enjoy. Thanks.
With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially. So we keep the cover charge for our events affordable, and if you cannot afford the cover charge for whatever reason, just let me know. We have ways to make it work out. We're always looking for team members to help out. All our team members can attend for free, and there are lots of other perks to being a team member. We try also to have a decent meal at each and every one of our events. Was this meal decent tonight? Yes. Well, we have Chairman and Sterling to thank for that decent meal. So let's hear it for Chairman and Sterling. Next week it's back to Costco pizza, FYI, just to let you know. But more importantly, at each and every one of our events, we want to make sure we provide value for your time, which is your most valuable resource. Is anyone here getting any younger? I always have to check because there's always someone in the crowd. But bottom line is when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do. Law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of other players in Silicon Valley. So tonight, once again, we're grateful to Sharon and Sterling for hosting us at this beautiful venue. Is this a beautiful venue? Yeah. Well, let's hear it for Sharon and Sterling. We've held many, many events here, and we look forward to many, many more. Some of our other partners are here tonight. I'd like to also have them come up and say a few words. Let's hear it for Chrissy and Quixie.
Hi, I'm Chrissy with Quixie. We're a mobile app cybersecurity company located in Menlo Park. We provide vulnerability assessments, control of your mobile app, IP protection for mobile apps on Android and iOS. So if you guys are in the process of building a mobile app, come see me after the event. We work with banks, credit unions, and healthcare, retail, e-commerce, and I'd love to help you. Thank you very much.
All right, next up we have Mike from CTO 911. Applause.
Thank you. Hi everyone, my name is Mike with CTO 911. I offer consulting services for startups and entrepreneurs building cloud-based application, on-demand applications. And lately we're working on getting a lot of interest on blockchain, Bitcoin, Ethereum type application, as well as data science and machine learning applications. So if you need help or assistance in those areas, I'll be glad to talk to you. Yeah, enjoy the event.
So we have Ryan from Cloud Brigade. Let's hear it for Ryan. Applause.
Hi everybody, I'm Brian Phelps. I do three things really. I manage an Amazon Web Services company, so if you have any questions about getting established or migrating over to Amazon, I'm happy to answer any of your questions there. I'm also with a company called Founders Click. Founders Click is a social community for entrepreneurs. It's a business ecosystem as a service. It's a portal, so we can set you up with vetted service providers, business development professionals, and funding. And I'm also the senior director for the Venture Capital Roundtable, which is a private organization for private equity investors. And we meet once a month, and if you want to talk about funding, I might be able to introduce you to those who can help you in that area too. So again, I'm Brian Phelps. It's great to see everybody, and thank you, Rob, for the event.
So though our local mission is to support entrepreneurs here in Silicon Valley, our greater mission, though, is to democratize entrepreneurship and innovation all around the world. To that end, we have a robust YouTube channel, youtube.com/idea-to-IPO, so go there and check it out. We have tons of videos. We've documented and archived many of our events, and this rich, valuable content is available on demand, anytime, anywhere, totally free of charge, whether you're in Menlo Park, Palo Alto, Maui, Moscow, or Timbuktu, anywhere where there's Wi-Fi access. Our partner in this endeavor tonight, helping us with the video, is Bread and Butter Productions. So let's hear it for Dylan and Michael.
Good evening, guys. My name is Michael. This is my partner, Dylan, and our third partner over there is Alex. We are in charge of today's audio and video for tonight's event. Our production company is called Bread and Butter Productions. We specialize in creative content with videography and photography. If you guys have any questions or anything you guys want to talk about that involves product shots, video, commercial, promotional videos, feel free to come up to us and exchange information for more information. Thank you.
Okay, so here's the agenda for the rest of the evening. We're going to get started with the formal program. Our panel is going to have a discussion until about 8 o'clock. Audience members, please hold your questions. At 8 o'clock, we're going to take audience questions. If you have a question, come up to this lectern, use the mic, and we'll try and take as many questions as possible until about 8:30. Then we'll break. There'll be time for one-on-one conversations, networking. As a courtesy to our hosts, we'd like to leave the building by 9 p.m. I think there's an after party at someone's house. I just don't know what the address is. But actually, we'll have arrangements to meet elsewhere if you want to continue the conversation after 9 p.m. So with that, I'm going to pass it off to our distinguished moderator, Nathan Me. And since it's not just all about me, let's hear it for Nathan and our panel. You got that?
I got that. Thank you, Rob. So before we talk about who we are, let's just get a quick idea of who's in the audience here today. Just by show of hands, who is a founder of a FinTech startup or works in a FinTech startup? All right. How about works in FinTech at a mature company or in the government? All right. Someone with an idea for a new FinTech company? All right. How about an investor? Fantastic. And then will assume the rest of you are just curious about FinTech and wondering what it's all about. So we'll go down the line and introduce ourselves and say what we're here, what our backgrounds are. I'm an attorney here at Sherman & Sterling. My experience is largely in capital markets, both in the established public markets and also in venture capital and startup fundraising. I also work with bank finance and financial institution regulation and corporate governance and M&A.
Hello everyone, my name is Deepak Shah. I work with a company called Yodlee Infotech, and I work as a director of engineering with Yodlee. I've been with Yodlee for a long time. Lately I've been focusing on FinTech in the financial data aggregation sector. Before that I was working in payments and funds transfers. And before Yodlee, I was working with New York Stock Exchange on options trading platform. So that's about me. And
thanks, Deepak. I'm Stephanie Lewis, and I'm at IBM on a strategic partnerships team. We're called Channels in IBM Speak. And I'm out of San Francisco. I work a lot with fintechs in order to, let's say, embed technology, think about joint go-to-markets, advise, or just join together kind of the enterprise viewpoint with the fintech viewpoint. Previously, I was at business school in the UK, saw a lot of the London fintech scene, which was quite exciting. Then Brexit, which was maybe not such a great signal for them. Previous to that, I was in New York at a kind of pharmaceutical finance startup. I suppose it could have been termed InsurTech, but it was kind of before the terminology came about. But I look forward to hearing your questions later and passing on.
All right, I got one. Hello, everybody. My name is Hugh Liang. I'm currently with a company called State Street Bank. I'll explain that a little bit because State Street is probably the largest bank that you've ever heard of. It has about $2.5 trillion under management and about $29 trillion under custody. I head up a group called Emerging Technology Center, and our mandate is the identification, exploration, and more importantly, the prototyping of these sort of new technologies that we think could have a long-term impact on State Street. I became part of the bank in 2007 through an acquisition of a Menlo Park-based company, and we were the first company in 2000 to create a large-scale institutional platform for foreign currency trading that became the largest high-frequency trading platform out there. So this is sort of my coming out party a little bit because I got 2 more weeks left in the bank before I go out and start another company of my own.
Great. Wow, that's loud. So Max again, I'm with a firm called Synapse Partners, a venture capital firm. Prior to that, I was at another firm called Trident Capital. We were investors in a number of different areas, as well as the fintech space. We did 2 deals in the prepaid card space, one in the UK, one in the US. We did a merchant processing company, a PSP, a number of investments. The new firm, Synapse Partners, which is a startup, so it can certainly relate to folks in the market, but we're focused on the intersection of enterprise and AI. So the idea being less AI as a platform and more enterprise applications that focus on embedding AI to solve complicated problems. So the elevator pitch is in the same way that SaaS was really about building a compelling UX. We think the next generation of software is going to leverage AI to deliver insights that will essentially be the core of the value of software. So we're focused on investing in Series A is an ephemeral term these days, but companies with commercial products and writing kind of $1 to $2 million checks.
Thank you. All right, well, let's get started. So, according to KPMG, over the last 2.5 years, more than $77 billion has been invested in FinTech, $31 billion from VC investors. And it's easily one of the topics that's getting the most buzz currently in the tech press. But what is FinTech really? And what makes it different from other tech sectors? Stephanie?
Great. So to me, FinTech is really unique in that you do have that enterprise collaboration and really strong interest, sometimes from even get-go, right? So you'll see consortiums, you'll see collaborations. I was at Plug and Play the other week, or last week, and they have a lot of startups pitch to be part of their incubator program, which then connects them with enterprise. And that's really, I think, at the crux of FinTech. But just generally, what does FinTech mean to me? I would say it's anything that touches a traditional payment or banking system. I really have a quite broad definition. Other people would argue with me, but I'm going to include InsurTech, RegTech, where it's financial and even maybe point of sale, increasingly also identity, verification tools.
Thanks. Matthew, what would you say are the hot areas in FinTech right now?
So, I think our focus makes me biased. We're really focused on opportunities where AI can be used to as a compelling part of the value prop. I think the two areas that are most significant, maybe I'll just turn this off and use a little bit. So I think the two areas that I'm most excited about are one, areas where data can be compiled and really used as a proprietary and compelling asset for differentiation. So I think companies that can get access to data and do things like, for instance, develop unique IP that can change an underwriting model or can do better things around transaction monitoring or KYC or AML. I think all of those are interesting because data is fundamentally a moat, especially if it's proprietary data. So we're always interested in companies that are either generating new data or have access to unique sets of data through their business model. The second area that I think is really interesting is fundamentally there's a lot of shifts going on with business models in general. I think I was reading a book recently that made the point that a lot of the most revolutionary tech has been not technological innovation, but business model innovation. If you look at Netflix versus Blockbuster, a lot of it was around changing that model from a business standpoint, not around the technology delivery. So similarly, I think both in FinTech and InsurTech, a lot of the most exciting things in the next while will be companies that turn business models on their head and say, we're not going to use the existing business model that banks or financial institutions are using. We're gonna fundamentally change it. We're gonna shift around the value proposition. We're gonna figure out how we're going to more align value with what we charge. So companies that kind of get that and have something unique there, I think will be very interesting and compelling.
I'll add a couple of things to this. I agree with what Stephanie was saying before. In terms of the definition, it's hugely broad, right? To me, it's just anything that's using technology to try to change something in a traditional banking environment. But then if you say, what is a traditional banking environment? Let's look at all the different banks available, right? Yeah, so most of you probably have not heard about State Street until I told you about that, right? So that's a custody bank. But if you look at all the different banks out there, there's retail banks, there's commercial banks, there's investment banks, there's all different type of banks that provide services. So all of these banks, in some degree, need new technology. And financial services in general, I think, have amassed many decades of technology debt. State Street, for example, we have 1,700 production applications throughout the bank. The bigger ones are the mainframe machine that takes hundreds of millions of dollars to support per year. And the smallest ones are the custom macros that we wrote for a particular asset manager to settle their trades a particular way. So all of those different type of services within the different banking industry cause huge amounts of problem everywhere. So any kind of technology that can solve some of those problems are going to be really interesting. And for us as a huge infrastructure bank, we've been spending a huge amount of our time in the last 2-3 years on everything blockchain related, anything AI related, even the augmented reality you can imagine can save many, many screens on a trader's desk. So it's almost limitless, right? It's up to imagination on what you can provide to help any kind of banking system, do things a little bit better.
So for me, FinTech is, if you see, go back 10, 15 years ago, right? Every interaction you have with bank, every interaction you have with the bank, you have to actually drive to the bank, be in the line, and I'm assuming that time there were more lines than now. So over the time, technology has solved a lot of that problems. Take an example of even to deposit a simple check, you used to go and drive to the bank, do it in person. Now with the technology, you don't have to do that. You can do it directly from your phone. So that's the FinTech, that's our technology application in the finance industry. And I think what we are seeing today is just a beginning of FinTech. FinTech, the way I see it is in the two areas. One is the consumer side of it. We are seeing a lot of revolution in the consumer side. We are seeing a lot of applications coming in, helping consumers interact with the banks. Before, you used to get statement once in a month in mail. Now you get your statement right away on your phone. Before, people have seen maintaining spreadsheets to figure out how much they are spending in which categories. Today, you log into your bank application and you have all of that right there for your information. So that's the consumer side of FinTech. And the next wave will be more about what happens behind the scene in banking. So take an example of lending. So the lending processes, mortgage lending still takes 30 days to close. As more and more technology use is going to come into the banking, that's going to come down. And that's going to be the major driving factor. I think that's where I see a lot of growth, or hard part of the FinTech is now going to be behind the scene as much as the consumer side of it.
Well, just building on that point, how do you see FinTech changing in the near and long term how we pay for or get paid for things? Will it be the end of cash? Will it be the end of credit cards?
I think the payments are going to get simpler and simpler. Cash will be there. I was thinking about your question, and I personally still carry cash if I'm going out of state, out of country. I think that is going to be there. But if I'm going to go in the Bay Area, I don't carry cash. I mean, it's probably a long time I personally used cash for any transaction. So credit cards are going to be growing in the uses. But cash is continuing to go down, but I don't think cash will completely go out of picture in a while.
So I recently heard about this startup called Keo. Has anyone used it? So you can put your palm to verify your identity. Nothing else needed. You just walk along on a run. You don't even need your phone at this point. So it's really amazing what could be enabled in the future, and really change as well the rails on which we might think a transaction occurs. So that could have winners and losers. Maybe the credit card companies would be a bit devastated by that if you could just link that up with the digital wallet and not have to go through a credit card company. But if they're smart, they might innovate ahead of that, maybe use blockchain, who knows? And that's a whole other can of worms all in there.
What's the reason why we need cash? Other than the fact that we started out, as an early civilization and used some kind of object to represent some kind of store for value, and we bartered with it, and then we used it to kind of store value, and then we came onto the gold standard because it has actual utility, and a lot of the central bank back their fiat currencies on the gold. And right now, if you look at all of the central banks out there, they all have their own systems, right? We move money across them. It takes a long time. Why would we need cash in the long run? Other than the fact that most people have not accepted the idea that you can get rid of that. And also, it's kind of like the last mile problem, right? How do you actually convert these people who are not technology heavy to actually give up certain type of things? We were talking to the panelists earlier. We did an experiment. It was more of a survey exercise. We took all the EVPs within the bank and we have them answer a bunch of surveys. And one of the questions is about the frequency used checks. And then we asked the millennials, the interns, the same kind of question. And the responses were staggering. So if you just look at the data points and what we're moving in terms of technology, it's just a matter of time when things like that disappear. To me, the real question is, I don't think there will be a final system, but what would this payment system in the future look like? Will we actually be on a blockchain and Bitcoin type rail where there's only one central currency around the entire world? I don't think that's the case, because then you lose monetary policy, people can't adjust interest rate, you can't do all of this stuff. But I think in terms of the need for actual cash, I absolutely think it'll disappear. Whether it's 2-3 years or another decade or two, sooner or later, I think it's before the end of my lifetime, we'll probably just be paying biometrically or through other kind of devices, and I just don't see any point of having cash around.
I always like when there's contrary views on the panel, so I'll try and be the contrary view on this one. I will take the over on it. I don't know if anybody here remembers a company called Vivo or Vivotech. I looked at investing through the NFC curve and watched a lot of companies boom and bust. I remember Pay by Touch, if anybody remembers that company, which was a giant hole in the ground. I do think fundamentally when you get outside of the valley, it's worth asking, why are you thinking about somebody changing what is a system that's currently working? And agreed, money isn't a perfect system, but I think fundamentally, we always challenge companies to say, what is the problem that you're solving? And again, it's got to be the solution that you're proposing. If somebody's going to fundamentally switch, especially off of something that's as familiar and ingrained as cash, it better be at least 2x, 3x better. So I think the real flaw with the NFC market when it came out, and I mean it still is gaining traction very slowly, but people didn't focus on what's the problem that you're solving. They said, oh, well, you won't have to swipe your credit card. Well, fundamentally, it's not a huge problem for people, right? Why would you stop using your credit card? I get points for it. So it better be something that's pretty compelling. There's not a ton of pie to go around. Cash isn't great, but it works and it's accepted universally, et cetera. I do think that millennials will create an interesting opportunity to look at new adoptions, and certainly we're seeing with Venmo and other folks that grow rapidly now. But I think every company should have a why about it, and if you're thinking about displacing cash, think about your use case, think about why, not somebody in Silicon Valley, but why somebody in Oklahoma is going to use it to pay, and maybe it's rewards, maybe it's the ability to leave your wallet at home, but it's got to be compelling. So I will argue that I think I will still be using cash when I'm paying for my funeral.
Can I add to that?
Yeah.
So, well, I'll go back and forth a little bit on this one. I think from a consumer perspective, you're absolutely right. You have to have the need. You got to solve a real problem. Otherwise, why change? Why lose the 2% that you get on your credit cards, right? But look at it from the institutional side. Look at it from the central bank's perspective. Look at it from the very, very opposite end of the retail, the institutional side. So for a year and a half ago, I was at this event. It was the first event that the Federal Reserve threw, and this was in San Francisco. And the idea was to say, okay, what is this concept of cryptocurrencies, and what is this concept of blockchain? And they had a tour, and they took us down to the Mint on the I don't know how many floors down it was below surface level, but they showed all of the 1 cubic yard acrylic boxes that all the money that comes in from all the regional banks, and they showed all the process of all the people tagging every stack of bills, moving it across, and ultimately it goes into this big German-made machine, and it scans every single bill for quality, right? Whether it's fit for circulation, if not, they shred it. If it's a counterfeit, it kicks off to the FBI. The cost of that is absolutely staggering, and people think Bitcoin is used for money laundering. Look at how much US dollars is used per year for AML, illicit activities, and everything else. So I think from a central bank's perspective, it's really, really beneficial if we can actually get to a fully electronic system, right? It'll still cause new problems, but it'll solve a huge amount of problems that we have today.
So on that topic, actually, so instead of talking about cash, I mean, the more immediate problem or a step term would be, when can we get rid of checks, right? That's more, we are still dealing with checks when we have all the electronic funds transfer available and all that stuff.
Checks is just a US problem. A lot of other countries already got rid of checks.
Yeah, that's true, but as soon as if we are to solve this problem incrementally, I don't think we can get rid of cash anytime soon, probably a few decades, even 5 decades, I guess so. If we can get rid of checks first, then let's say get rid of fax machines, and then we can slowly, gradually go towards completely paperless currency.
I'd be happy to get rid of pennies. Start there.
Got to get rid of the copper lobby first.
There you go.
So, looking at FinTech from a consumer versus an enterprise perspective, what are the challenges, the growth, and the real utility that you see on the enterprise side? We'll start with Stephanie.
So you're asking about the enterprise side or the consumer?
Yeah, on the enterprise side, yeah.
Okay. Yeah, from our viewpoint, I think that when we think about consumer fintech, it's often about how can we enable developers to really provide whatever customer experience they want to provide, usually through our Bluemix innovation platform. So I'm kind of going to the product level here just to provide more details, but we have a whole cloud for financial services layout, and it uses some of the best fintechs out there and some of their pre-done tools. So you have Plaid, you have Xignite, market data. That's a bit more like B2B. But anyways, the idea is equip any developer, any entrepreneur with the ability to make something truly useful. So I think we're getting to a nice point where if you want to do a fintech company, you don't have to reinvent the wheels on how to deal with regulation, how to deal with actual payments. You don't hopefully need to even think so much about the whole process because you'll have so many other partners in this thing that you can just go off and do what you'd like to. On a similar note, we provide blockchain as a service. We provide blockchain high security networks. We provide a lot of different options. And the blockchain as a service is at 20,000 transactions a second right now. So that's really quite strong, and it's available to anyone to really use. So I think that's our approach, is to really try to democratize the ability to use cutting-edge technology in a novel way.
Who, from the perspective of the sort of financial backbone, what are the key opportunities you see for FinTech to change how that works and make it work better?
Was just connecting this to the sort of the retail consumer and then the institutional side is, I think on the retail side, you can really let your creativity and imagination run wild, right? It's great, it's fun, it's sexy, and you can get a hold of the customers very easily and test out your way of thinking by throwing out an app. Institutional side, you can't force the institutions to make changes, right? As much as the institutions want to make changes, the regulators are not going to want the institutions to make changes. We were talking about this earlier. I think in a lot of cases, we think the regulator, we always fall back on the regulator and say the regulator won't let you do something. It's not that they're necessarily slow, and they are slow. It's just that there's so much money behind it. Like you look at State Street, you have $30 trillion under custody, right? I cannot just wire $100 million on the blockchain and send it to somebody in an anonymous address that you don't know who it is, right? The regulator wants you to know who exactly you're sending the money to and making sure they're not on the OFAC list and all of that other stuff. So I think that the institutional side is about truly going after solving a problem that is there. Not about trying to say, oh, here's a new way of doing something, let's go do it. I mean, the financial market has been there for hundreds of years, and people are not going to very likely change the way they do things. So find something that is really, really wrong and try to change that. So that translates to basically how do you save more money, right? I think the institutional side are less thinking about how do I tap into 100 billion users and actually gain more revenue. They're more worried about, well, this cost, this 3-decade-long of technology debt, if I can save $100 million and not run my IBM supported, nothing about IBM. If I don't have to pay IBM hundreds of millions of dollars to support my mainframe, then that's the innovation I want to take on. So if we can focus on that kind of areas, a lot of good results, I think.
So to continue on that, so cost is one thing. It's going to go and drive a lot of innovation and fintech revolution in the enterprise side. So I see that a lot of banks are actually now running their own hackathons. They are so eager to get into the fintech world. And as I said, like cost is a big factor to that. Just take an example, as I was saying earlier, for your mortgage application, before you used to submit all your documents in person, then someone has to go and go through them in person. And again, there is a trust factor that you haven't really forged your documents there. Nowadays, it's moving to more fully electronic, where if I need to give my bank statements, we have a technology available that, and one of the product of Yodlee does this very well, is if I'm going to apply a loan with Bank of America, but my savings accounts are with Chase, Bank of America using Yodlee products can directly get access to the Chase transactions and statements. So that's a great thing, because then there is no issue with whether any of the documents is forged or not. The data is directly coming from one financial institute to another financial institute. So this is actually one of the hottest area in the consumer lending. So the lending FinTech is driving a lot of this to become more efficient, save a lot of cost, and also be more robust in terms of the processes.
So Deepak, if you were advising someone running a FinTech startup about how to deal with or how to think about the additional regulatory challenges that come with being in the financial industry as opposed to having an app that does food delivery. You have state and federal financial regulators, you have data privacy risks, you have criminal issues with money laundering. How would you advise someone to think about that when they're trying to build their startup?
So the way I see this going to develop into is, I think first the wave will come as a platforms, and I'll give an example. So when Yodlee, my company started, there was no easy way for a consumer to get that data from their financial institute, use that data. I mean, you could download from the site, but you still have to massage that data in spreadsheets and all. And if you want to take it to another institute, you have to print it out, or some other way you have to send it to, or fax it to some other institute. Yodlee came in and built a platform where we can aggregate all this data on behalf of consumer, and that's all based on a consent from a consumer. So that takes care of your privacy and compliance issues and all that stuff. So the way I see it is that first we will have platforms coming in, and then on top of those platforms, then we'll see innovative apps coming in. So I'll give an example. When Yodlee was kind of in 9 or 10, we saw a huge FinTech boom. I mean, starting with, if you remember, Mint.com, we have credit cards, we have personal capital, now we have a lot of robo-advisors coming in. They are all built, they didn't start from scratch. They are built on top of other companies who built that platform and brought that value. So even if you want to create a personal financial management app today, it's very easy. You can use any of the financial data aggregators like Yodlee and get started with your app. So the platform is there today. And as we go more and more, like we have a platform for compliance, as we have a platform for regulatory technology, then it will be like slowly building on top of each other.
Yeah, just to add to that, I don't know if anybody follows the UK FinTech market, but I think one of the interesting things they've done is putting in place what they call a FinTech sandbox, which is the opportunity for the government to allow a certain number, a particular company to onboard a certain number of users and try out financial products in a limited way to essentially do what we tell all startups to do, which is kind of do an MVP, see whether the product resonates, test it out, gather data, and then decide whether to scale. Fundamentally, the mantra of moving fast, breaking things, shutting down, trying something else is very difficult to do in the financial services space for good reason, right? I mean, you don't want somebody messing around when it's people's money or when you're doing lending. We've got a lot of regulations in place for good reason. So, I think it'll be interesting to watch whether they have success or whether they face challenges with doing things like a sandbox. I've heard more talk about some of the agencies allowing that in the U.S., but I think fundamentally, if we're going to look at developing new and innovative services, and the U.S. is going to maintain its position as one of the, if not the leaders in the fintech space, we need to figure out how to do that better. And folks like Yodlee certainly solve part of the problem, but the regulatory part of it, if you're looking to roll out something in the insurance space, the financial services space, the burden is still very high. The legal costs associated with compliance is still very high. It's not conducive to innovation. The other thing that I think will be interesting, again, just to go to the UK market, is watching things like PSD2 that are freeing up the movement of financial data and allowing folks to build financial services on top of the banking platforms. The vision that I would like to see in the space is banks continue to maintain their position where they handle things like regulatory compliance, maintaining capital levels, setting up the pipes, but folks like yourselves are able to develop innovative services on top of it. And I think PSD2 does a lot to do that, but we were talking beforehand about even the challenges Yodlee sees with a balkanized system for getting access to consumer data. That's not going to be helpful if you need to build 8 different connections for 8 different banks. Even with Yodlee's help, I think it's going to be a very frustrating system for folks on the that are 3 or 4 guys and a dog, or 3 or 4 gals and a dog to build. So worth watching, and worth to the degree that you end up sitting down with somebody on the regulatory side, continuing to pressure them to develop a tailwind. Because I think other markets like the UK and Europe may end up pulling ahead of us if we don't get our act together.
There is actually a proposal that the Office of the Comptroller of Currency, which is one of the main bank regulators in the United States, is working on they call their FinTech charter, and it's similar to the sandbox described, that would give people kind of a space they could move around with limited regulation. But the problem is, in the U.S. at least, you still have a handful of other regulators. You also have state regulators. You also have regulators that cover banks on things that aren't related to money and financial transactions.
So I want to touch on that a little bit. The sandbox gets thrown around all the time. I'm on the advisory board of a thing called FinTech Sandbox, which is a Boston-based nonprofit that specifically supports this kind of stuff. But getting something out of the sandbox into reality is hugely, hugely challenging, right? Because the sandboxes are really, let's face it, it's a playground. It doesn't really connect into anything real. So if you hear about all of these different regulatory bodies, whether it's central banks or whether it's large banks, trying new payment systems and such, none of these things are actually linked yet into a real wiring system, for example, right? When you move things out of the sandbox, it takes a lot of work to wire it together. So just because something is in the sandbox, it doesn't really necessarily mean it's going to get somewhere. So we always talk to the companies that we talk about and so forth is, don't get so excited just because you're led into the sandbox. The real value still lies in the businesses accepting the value created. So go after the businesses, make sure they see the value, and make them be the proponents to get you into the door. The IT side within the banks are not the profit centers, and they're not going to make the final decision calls.
So would that be your advice for a fintech startup as a way to maybe to handle some of these issues? Would be to get the support from the bigger institutions who have the experience?
Definitely get into the bigger institutions, but what I'm saying is within the big institutions, go after the businesses. IT is a cost center, right? IT's job is to make sure things don't break, and IT's job is to make sure that whatever cost $300 million last year is going to cost $290 million this year, and that continues on that rate. Anything I think that's earth-shattering, what we would call disruptive or transformational, it's not going to come from the IT side. Get the business unit to really buy into it, whether they can save money themselves and go to their bottom line, or help them increase the market share. They're the people that's really going to help you win the battle.
So, having heard all this too, I think there's a cloud element to really consider with financial services. And at IBM, I'm always so surprised about how many banks, how many financial companies are very resistant to going public cloud. And it is IBM's strategy to sort of allow and understand that and really work with them to maintain the regulatory standards that they've taken so long to build. But it's also fascinating to see how the fintechs are really adapting and realizing that they too have to kind of be careful on security, be careful about how they treat data, about how they approach almost everything. And they're becoming a little more mature and more enterprise in their thinking as they have to work with these same enterprise banks. So for example, given a choice of what workloads to put on a public cloud versus keep in a private or more like local instance of a cloud, or even really like on a mainframe, a lot of times the most sensitive, the most important transactions or workloads are still done behind a firewall. And we don't really see that changing. Like, it's been remarkably consistent. Cloud's a really compelling story. For IBM, it's always the hybrid cloud. So I think that's just another kind of echo to all these considerations when we deal with fintechs. The second really element here is as well that kind of highlights some of the challenges of the sandbox is around blockchain. And so IBM usually sets up for a company or a consortium a shadow blockchain before they implement a real one. And this is definitely a POC. It's trying to get everyone on board, kind of a sandbox. And it's such a political and kind of team building effort because there's got to be a leader. Sometimes it's a third-party consultant. sometimes people do form a kind of collective or an organization to actually like regulate that blockchain, but it's nowhere near quite as simple, I think, politically as people always imagine it is. So there's a great business in blockchains, but they still have to go and convince everyone to use them, and I think that's where the challenge of any kind of sandbox lies. It's usually the politics, it's the institutional players that have a real stake in the game, and not everyone wants to adapt at the same speed.
Just, is that on? Just out of curiosity, because we actually have something that you don't get to see very often, which are folks that have had the opportunity either at State Street or IBM or Yodlee to watch kind of large-scale deployments. What would you guys say is the time frame from kind of the first time that somebody pitches a bank for a new service to get something up and running that involves touching kind of the either the core banking system or the guts in the back end for a bank? What do you think is a reasonable benchmark for time to roll something out?
Startups. Yeah. So if you're a startup and you want to deal directly with banks, I think instead of timeline, there is a question of if they're really going to give you access, and that's where the intermediate players like Yodlee or the platforms come in picture, and that's what I was referring to. Like you want to have a relationship with the bank itself is so difficult. I mean, bank will not have any relationship unless you go through like tens of audits and tens of background checks and all that stuff. So I believe for any startups to start or to start creating a new thing, their best chance is to rely on the existing platform, the SaaS companies who are providing the right platform to solve the problems. Take an example of data aggregation, you have a platform for that. Take an example of money movement, you have a platform for that. Whereas you don't have to directly deal with bank, but you can deal with more startup-oriented companies. So good starting point would be go step by step. When you're big enough, then banks will come and talk to you about it.
Just to kind of add some context on that, so I would say oftentimes it's at least a year. If you're convincing the bank to do something with sensitive workloads, from sales cycle start to finish, or at least, and that finish might be a POC. But however, if they're very invested in a new innovation effort and or if they have a reason to change if something's not working, then you can see it very rapid.
So I've been at the bank for 10 years now since the acquisition of our company. I've seen projects that started then and still didn't finish now. But at the same time, there have been capital markets plays where it really just took no more than a few months or so. And it's because most of those capital market plays are trading related organizations, right? So instead of using this screen to trade, let's just use a different screen to trade. So as long as these new incumbents or new companies pass through the audits and everything else, they'll just let it through. And much of that is what I was saying before, is that if you can provide a capital markets play that really doesn't change people's existing way of doing things, but you simply gave them something that's better, save them more money, executes the trade faster, already pre-integrated into Bloomberg or Reuters, it's actually fairly standard for them to change. But I think anything, if you're talking about that touches core banking, so in State Street's case, large-scale money transfers, connectivity to the other clearinghouses and things like that, they go on and on and on. Probably past our lifetime. Unlike money will be gone in our lifetime.
All right, well now time for the fun part, predictions. So what do you think are going to be the areas of FinTech that are really going to change the way that people do business and interact and connect financially? And we'll just go down from the end, so start with Matt.
So one of the areas I'm kind of pulling apart now and trying to better understand the ecosystem, but in general I'm excited about, one, because it's still very inefficient paper-based processes with manual intervention, lots of potential for data, but is around trade. So a couple lifetimes ago I was at a company that was selling telecom equipment to markets like Malaysia and Nigeria, and we had to deal with letters of credit. And if anybody's ever gone through that process, it is an excruciating process to get access to millions or tens of millions of dollars, and it involves manual review of paper, discrepancies, and faxes, and it's awful. there's a lot that can be done to obviously do those processes digitally, but then once those processes are digitized rather, that you can do a lot as far as monitoring the movement and progress of goods, which obviously has a lot of value for supply chain, and then also to handle the factoring and financing of those trades, which then, back to the banking system, involves trillions of dollars in trade that can be more accurately financed rather than what we've got now, which is a black box that something's loaded on a ship and then you kind of don't really have any transparency as far as what happens on it. So that's one of the areas that I like, that maybe is less in the focus than some of the other spaces out there. One other one that I would throw out that I was having a conversation with the gentleman before this, I'm still a little on the fence on, is RegTech. I think there's similarly a ton of opportunity to apply machine learning and AI to do a better job of looking at transaction monitoring, KYC, AML. It's a little bit to the points that some of the other folks up here were making, figuring out the right tone of greed or fear to strike on that to get people to actually move off of legacy systems and deploy. Long sales cycles, people that are kind of not really compensated to take risks. Those are all the things that I don't love about that space, but I think fundamentally there's, I sat down with the chief data officer of Barclays and he said, blockchain's a really interesting shiny object, but he said, we lost more money on regulatory fines than we made in profits last year. I think that was in 2016, so he's referring to 2015. So hundreds of millions of dollars. So if you're looking for a high ROI, if you could solve their AML fines, there's a pretty good ROI on that, and they could pay you tens of millions of dollars and you sell a really good ROI. So interesting space.
Barclays is a different type of bank. They lose a lot of money by doing some interesting things. State Street has never lost much money at all because they're just so conservative, they don't do anything. I guess we can answer that question sort of in two different ways, right? One, we can functionally talk about which area that perhaps might be most interesting, or we can talk about it from a technology perspective, which technologies are most interesting. So I'll talk about it from a technology perspective, and one of them I'll do a shameless plug on what I'm about to do next. I think the AI space, which is very, very broad, right? The machine learning AI space, it is just ripe for some kind of actual utilization. All of our capital markets groups are really looking at this kind of stuff. If you look at what does a business analyst really do in an investment bank, right? They do a lot of pre-trade analytics, right? They look at all these macro information, they turn it into a little report, they give it to the salesperson look at it so they can start the day and call their clients and tell them all the cool things that's about to happen. Those are kind of activities that has a lot of analysis already done through machine learning type activities, right? There's a company called Kensho, has nothing to do with State Street, but they are based in Cambridge. They basically are funded and incubated by Goldman with the sole idea of replacing a lot of these analysts. If you look at market making entities, people that are doing trading, I mean, for years and years now, decades now, people have used algorithmic trading, right? But those are just rule-based programs to look at patterns within the charts. But now you can truly use things like, supervised learning or even some of these deep neural network systems to really look at almost countless number of inputs to basically correlate things that are about to happen. So I really think it's a huge piece. But then you can also get into very simple stuff, right? Like AML prevention and fraud detection, and just use the millions of transaction record that you have per day to do that kind of stuff. The other one I think is really interesting, I'm not going to say blockchain, because to me, we've been working on that nonstop for the last 2-3 years. And to me, blockchain in the institutional space is just another technology. Some of the pictures that these different companies draw about the blockchain stack looks just like the J2E stack of the 2000s. And it'll be a way the company can save money. Over time, hopefully many of the banks will use blockchain and we'll all save a little money. And once all the banks are using blockchain, then some kind of interoperable API will appear and we'll be in a better world. But I think what's really, really interesting and transformational these days is the concept of crypto assets. Whether it's Bitcoin or Ethereum or all the other usage tokens that are sort of coming out of the ICO market, what I'm seeing is, a lot of these large multi-billion-dollar funds are basically saying, hey, if we're a multi-asset class asset manager and this asset class is growing like this, we think it's going to be X times bigger in the future. Should we have this kind of asset in our portfolio? And so just think about how would you manage and trade and settle digital assets, not digital asset, but more crypto assets. And I think that's a really interesting space that all of the investment banks and all the large asset managers are really looking into. And it's a combination of technology and just sort of this whole new way of thinking and how we manage assets.
All right, I also have an AI future in mind. So to me, let's think about risk and let's think about opportunity. So on the risk side, you'll have unparalleled ways to model risk, to anticipate it, to start to think about how to model it. So for example, with Watson, we often train Watson on different data fields, data sources. These are often from the company, but they can be third party. So it's really up to every organization to think about how to build a comprehensive data strategy. This is both like defensive for risk side and also for the opportunity. So for example, if I'm an insurance company and I already know about my own policyholders, and I bring in weather data, and I have drones that look at satellite and then capture imagery of different rooftops and look at hail damage. And then I have satellite imagery data, and I look at different kind of geo trends, and I know week to week which areas are, like experiencing everything from, fires, deforestation, macro trends. You'll have a much better sense of what your portfolio looks like, what your business is looking like, how you can best serve your customers. You'll have the AI to understand what your customers are doing, thinking, feeling, utilizing. This is through IoT data, and let's say if that's in like the actual car, like Metro Mile. So you see this kind of fantastic juxtaposition of all these data sources, but it's going to be a little tricky, and you still have to really collect it, have the thesis in mind on which you want to kind of train your AI. Watson, for example, gets very smart and learns and grows, but it's always just like per client, per instance. So different clients, two different insurance companies, or two different FinTechs could have very different algorithms and like actual outputs, and that's depending on the data that you feed it. So I just come back to think about data and think about how it can change your risk and your opportunity.
Prediction side. So in terms of predictions, I think we'll have two ways to go. One is for the enterprise FinTech. It will continue to grow and make the processes more efficient, driven by the cost savings. And banks and all financial wants to do it because it's going to save them cost. It's going to make them efficient, more compliant. On the other side is going to be the consumer finances, and if you recall, 10 years, 15 years, we had to remember pay our bills every month. Now we don't have to do that. I have all my bills on automatic schedule. I don't have to worry about paying my bills. Same again, the example of driving down to the bank to deposit a check. We don't have to do that anymore. We have technology for that. In terms of prediction, I think we're going to get more and more advanced applications driven by data and AI in terms of helping end user make the financial decisions. Take an example, you have today statements available to you. You know in your head you have bills to pay, you know in your head what are the income you are coming in. We are going to get to a point where before you make a purchase, the mental calculation happens in your mind that should I make this purchase or not, will be done by an application, and it will tell upfront whether you should make that purchase or not, or hold on, because looking from past history of your data, your car is going to break down most likely. Your payment is going to increase. You might be getting paid less based on the current season. It's an example for a small business owner. So all these calculations, which today individual people do in their mind before making any financial decisions, will be driven by AI and data. So that's my prediction.
All right, well, thank you. I think at this point we will open it up to the audience for questions. As Rob said earlier, I think you just come up here and line up, and we'll need one of those mics.
Okay, two questions. I've been reading a lot of patents, and it seems to me that the banking industry, every major bank is writing for patents like crazy right now on what is almost public domain, Bitcoin, blockchain technology. Are the banks going to co-opt and curtail the gains of digital currencies, yes or no? from a banking perspective? And then the second question for IBM is, are you solving the proof of work and proof of stake problems?
So on the patents, I think banks creating or banks filing patents isn't different from any other industry, right? Let's just look at Apple and Qualcomm and see what the hell is going on with them. So it's probably even more so. I think traditionally, if you count the number of patents, banking companies have way less patents than IBM. IBM, for example, has single-handedly, I think, more patents than all the banking industry combined, I think, if you look at the statistics. So banks simply do it just because it's the same way I think everybody else does it, to kind of protect themselves. And banking is mostly less about technology. So most of the patents, I think, that are filed by the Goldmans and the B of A's in any kind of space, in particular the blockchain space, are just not going to be enforceable at all. And a lot of it...
They look enforceable. They look almost like public domain.
Well, I mean, so is Amazon's one-click trading, right? I mean, the bars of patents being granted are becoming higher, but there is no bar for you filing a patent. So you can file any patent you want, and generally speaking, the news will get a hold of the patent filing. Nobody will know about whether that patent actually gets granted or not. So I don't think that's
defensible.
Exactly, particularly that, and we should ask our lawyer expert here. But I'll let you take the other one out, but I'll have you jump on a little bit as well.
You mentioned, would, I think it was cryptocurrencies change the way banks operate?
No, will all the patents that are being filed by the banking industry, which is a lot, co-opt and curtail the gains made by digital currencies? Because it started off as
I see.
a
So you're seeing them as
very
competitive.
and it's really shifting.
I think they'd have to want to enforce it. So until the banks really deep dive into offering different products that are done in digital currency, I don't think they would bother to really enforce it. But that's just my opinion. I'm not at a bank. So as for your second point, is about proof of work, right? I don't touch it enough to really be able to comment on behalf of IBM. I would just say that in any of these, you could see some tweaks, you can see some changes, modernizations. Is there a fundamental reason to change the way the system currently is set up, the infrastructure? And I'm not sure about that. I think you need a business reason for that.
Great. Next question.
I'm also having two questions, one for Matthew and Hu, and the second question is for IBM, Stephanie. It's really happy to see your upbeat and optimism towards AI and the possibilities it can bring towards FinTech. I've been actually dealing with big banks like Wells Fargo, Bank of America, but their thought process of using AI, leveraging AI is just at the level of chatbots or very minimal usage of the artificial intelligence like recommendation, prediction, and all those things. So my question to you is, where is the gap? You're thinking really pie in the sky, but the reality is really low. Their thinking is very low. So where is the gap? How do you fix it? And the second question is more towards Stephanie. What is the rationale for IBM to align with Hyperledger over Ethereum and so many other things? Why did you guys pick that one, and how is it going?
So I agree that I think that the banks are in kind of a crawl, walk, run phase. I don't have maybe even as much transparency as the IBM folks do as far as where individual banks are on that side. But I do think eventually the pendulum will start swinging more towards fear and greed, and so there will be more banks that realize that they have to do something. So there have been a couple of interesting announcements around the use of transaction data and monetizing that. So Google has done a lot in this space for a while around kind of trying to close the loop around advertising and leveraging credit card data to essentially confirm that an ad that was shown drove a purchase. And so I think things like that will start to wake up the banks, and they're sitting on this unbelievably valuable asset, but they're very scared that they disrupt an existing business by kind of reaching for another opportunity. But once the logjam starts to break, once Google or somebody else starts to demonstrate the value of it, I think they'll move reasonably quickly, and it may be through a third party that they give access to. Visa and First Data have both announced that they are making transaction data available on an anonymized basis, and I think again, for the purposes of cross-selling, etc., there will be more movement soon. But that being said, it's a big problem, and it's one of those ones where I look at a startup and they have great ideas, but it's and this is insurance as well, but it's premised on getting access to banking or insurance company data, and unless they've got a very clear roadmap to do it, I won't invest before they actually have the data in hand.
I think one of the probably the biggest disconnects to your question is desire versus what the actual outcome can be. I think all the desire is already there. The outcome is none of the banks have really put any kind of big AI or machine learning product out there. Why is causing the realization versus the desire? A big part of that is big data, right? So if you remember 5-6 years ago when the term big data came out, everybody talked about big data, big data, big data, and now big data is kind of passé because now it's about machine learning. However, nobody's really solved the big data problem. So if you're in a startup that has a perfect application for machine learning of consumer behavior, and you've already proven that, you go to a bank and you say, please deploy this application. The banks say, okay, I want to do it because it's shown me great results. They're not going to be able to put any of their data together in a form that you can actually ingest it into your application. For that, it'll take them a few years to do transformation project 1, 2, 3, and until that happens, they're not able to realize the vision that you've given them. So I think that's the really big problem right now, right? It's that there's so much data. Again, use State Street as an example, 1,700 production applications. In order to piece together 30 of those application data into a single view so you can ingest it, it's a monumental effort.
So I think it's an interesting question. To your first point, whether banks really are using AI, I think does depend on the bank, and we can't always be sure. And let's take an AI example here. If we think that a sort of fundamental causal effect of becoming more innovative is, let's say, casual dress, then you could take Goldman's recent adoption of casual dress for its engineers as a good sign. So maybe they're trying to transform the way they're doing their culture, and we'll sort of have to see. But I would just say that each and every business unit can still become more and more independent. And oftentimes now, IT does not have overall control at a big company. So what you get with any bank really now is just like what you get at a big company. You have different teams going out, buying little cloud things they want, buying a FinTech application or a solution, and they can use that as they will. So maybe the trading desk has an idea for an algorithm. They can go and use the Watson API. We've made those very digestible and very specific. So that could be part of their whole algorithm. It could be part of the machine learning that they're doing, but we just don't know about it necessarily. So I still kind of tend to agree that they haven't made the big shift and big jump in. But to your second point about why Hyperledger, right, and why IBM has chosen to be part of the Hyperledger project, it's really around serving our bread and butter customers who are in the enterprise. They want privacy, they want a lot of security, and they need to feel good about who's in any blockchain network. And Hyperledger to date is really the blockchain for permission-based blockchains. So with Hyperledger, you can do things that all the others are not really offering. You can have your smart contracts. You can have, again, a very private and secure network. I think Ethereum is now trying to modernize and offer some different, privacy and different permission-based blockchains. But that's in response to kind of the success that Hyperledger has seen. So for us, it's the crux of what we want to offer, like something that businesses can readily adopt, whether they're a startup like Everledger doing diamond blockchains to show that a diamond was not a blood diamond, or a more enterprise one like Maersk in shipping that's transforming how a previously paper managed system is now going to a digital blockchain. So happy to talk more about it though, because it's like an arms race, right? Because we don't know how the blockchains will continue to develop, but at this point, Hyperledger is really strong for us.
Just one last question. So do you all think like blockchain is a real one now? There is a complaint like, we got a great solution, now we have to go after the problem we can solve. Do you think blockchain is mature that it's going to stay?
I think it's real. I think it's very powerful when used properly. It's sort of.
All right, next question. Come on. So hi, my name is Rafael. I have a question. I wanted to have your thoughts on the ICOs that are happening right now. Because as you know, the fact that it's like more accessible to public than like IPOs create like crazy things like raising more than $20 million in like 2 minutes. So I just wanted to have your thoughts on that. What do you think?
Okay, I'll give a quick thought. So okay, this mic is really not working. Oh well, Civic is a great example. So I think they raised $33 million out of an ICO a couple weeks ago. And it's really true to their kind of foundation as a company. They were founded to try to provide an online like voting system, and hopefully they'll get there. Now it's more identity verification. So for them, I think it's a perfect fit that they wanted broad spread buy-in. It's not even giving up equity. It's more just kind of buying in advance of their product. So I think it's a really nice alternative. Now, it works for a company that has some offering that maybe consumers or an investor would find useful. I'm not sure it's as scalable for like services businesses. But then again, you don't know. You can do vouchers. So that one is an interesting case because you do need something that can offer kind of that coin. So like I know I talked about Hyperledger. Hyperledger is not doing coins, which I think is maybe a hindrance in that regard if ICOs continue to build.
But you can actually build a coin on top of Hyperledger. Right, you can put any kind of coin on top of Hyperledger if you want. I mean, I can talk about this subject probably for the next couple of days. But the point here is that, I mean, if you really look at it, why do people want to do ICOs? Right, people want to do ICOs because we have a shift in the way that value is created over the internet, right? If you subscribe to what Union Square Venture Guy talked about, the FAT protocol, if you just do an internet search for the FAT protocol, and I believe in this, and it makes a lot of sense. The internet, as it is today, is what he's described as a thin protocol. So all the value is in the application layer, right? So the internet is used for free, TCP/IP is free, and companies like Facebook and Google reap all the benefit of pulling all the data out, figuring out what to do with it, and sell it back to you. The idea here is that if you can create a decentralized world where there is no central organization to charge you for that, but the value comes from owning these tokens that allow you to actually use the network. So now you have a FAT protocol. You're now paying to use the protocol. So in that case, you would want to own these tokens for two reasons. If you're an entrepreneur, you own the token and the value of the token increases, therefore your value increases. Vitalik, who created Ethereum, is now a billionaire because he owns a huge percentage of Ethereum, right? But at the same time, from a consumer point of view, you want to own the tokens early so that you can get it at a cheaper price, and later on you can use the network at a lower price because it's all appreciating. And then the capital market, which is what I'm tackling, want this stuff because they want to trade it. Anything that you can trade and speculate and make money off of buying low and selling high, you will want to do it. So this is what people think are quite different from what Bitcoin offers, right? Bitcoin might be a form of payment, right? Because it's already built a massive user list. It can also be a store of value because it's like a digital gold. People will take care of it. But this ICO market truly is a new way of raising perhaps equity. A lot of the some of the lawyers I speak to, they said, well, if this thing actually pans out, if it pans out, right, big if, then why do you need equity? Isn't this a combination of equity and usage at the same time? So a lot of people are looking at this kind of stuff. There's a couple of books that's about to come out from the guys on Wall Street, and to me, this is probably the most exciting area.
Okay, cool. Thanks. All right, next question.
Hi, my name is Julia, and I thought it was really interesting to hear you talk about the sandbox in the UK and kind of how it worked. I'm not from the US, so it would be interesting to hear your thoughts about other things that you've seen outside of the US market that maybe can be applied here, or if they can't, why and what needs to be done to kind of make that happen.
I'll start with one idea. So if you go to sort of the City of London, you'll see that the sort of Shoreditch innovation area with a lot of fintechs is very close by. So I think that kind of proximity and closeness is one just sort of obvious starter point that maybe the US lacks in a way. Like New York and San Francisco, yes, they're only a flight away, but it's a long flight, right? And it's culturally quite different. So we've got to kind of change that in order for innovation to start up out of those same finance, folks who've seen it from the bank. They've seen it maybe from a regulatory standpoint, but they want to apply it in a creative way. Not to say that doesn't happen, because certainly there are great startups and fintechs in New York, but I think if you sort of have also a smaller country that can get more involved from the government standpoint, then they could kind of do certain things to really help that along. They might want to really foster, like the UK is very, very proud of its fintech business and offering. So you get kind of some different incubation opportunities.
Okay, cool. Thank you.
All right, hey, I'm Colin. So I think it might have been who that mentioned this, but somebody mentioned using kind of augmented reality to support data visualization. I was wondering if you guys could speak more about any development that you've seen in fintech data visualization, and if you see the most potential in it on trading desks.
Yeah, so I'll talk about it a little bit. We actually did 2 projects in augmented reality using the Microsoft HoloLens. One is actually the Kernex, the company I was acquired through. We have an institutional trading platform for currencies. And basically what we did is we tied the HoloLens into the trading application so you can trade without a computer. You just use your hand. And anything that's post-trade activities, we tied into Alexa. So you basically wave your hand, and then you ask Alexa what you've done, and the thing just works together. For now, it's just a demonstration in this show, even though it does work and it's real time. I think the potential of that is huge for, potentially huge for financial services, because I don't know how many of you guys have walked on a trading desk. If you go to a trading desk now, they're just walls, right? So I'll be sitting here and I'll have about 12 monitors in front of me, and Matt and Stephanie will all have 12 monitors in front of them. Imagine a scenario where you can just walk in with 2 computer monitors that's just doing your email, and you walk in, you put on a pair of glasses, and you go about your day. I think it's pretty neat, and that workflow works, right? Because you don't want to be driving around and talking to your friends walking down the street wearing a big pair of ugly glasses, but if you're sitting in front of your computer desk where nobody can see you, I think it's reasonable. And then the other one that we tried, we haven't really got far along with it, is data visualization. The thing about data visualization, I think, is you got to think about is that, to me, it's eye candy, right? So you walk in there and you walk in to a room and you put on your glasses and you see this, whoa, this is really, really neat, and you walk around it a few times. And after that, you're like, okay, what else is to do after that? I mean, am I going to look underneath it all the time? So in a lot of those scenarios that we tried, it basically comes down to it's a wow factor in the very beginning, but if I want to find the 20 stocks that gave me the best return in the last 3 months based on a macro, I just type it in and it pops up. So I don't know how that will get used, or if any of them really get used, but I think there is a couple of, those 2 are probably the most interesting 2 use cases for banking.
We also saw data visualization, leveraging GPUs to do visualizations around security threats, just because there's such a vast volume of security threats, prioritization of security threats, and understanding how they're interrelated is a challenge. Ultimately, though, and I think this goes kind of the implied point that who was making. I think you start asking the question: is the better mousetrap that we improve visualizations for individuals to make better decisions, or that we recognize that humans aren't going to be able to make those decisions, and that they're reaching the capacity of their ability to digest visualizations, regardless of how good they are, and we just turn it over to machines with some level of human in the loop control. And when we looked at that company, they said, yeah, we're going to do this. This allows an IT security team to operate better, but we're essentially going to start looking at the workflows that they design around those visualizations, and then we're going to start really automating those visualizations with the idea that we start kind of taking the blocking and tackling stuff off their plate and automating that, and then eventually you try to focus them on the ones that have real cognitive understanding being important rather than vast volumes of data and digesting it. So I think that's where I'd see everything from stock trading to security threats going.
Just on a slightly different note, quick thought. So you have also the VR side and the gamification side. So a colleague of mine deals with a lot of gaming companies, and he was saying to teach any of their developers something, that they have to make a game out of the sales pitch. So in a sense, banks who could do that, who could make a gamification offering with VR or any augmented reality, could capture a new demographic. They could get kind of the Bitcoin types or the hackers or VR aficionados. So it's kind of a fun thing to think about, but I think it's a great question.
Yeah.
So I want to add to your question, like for the data visualization, as long as humans are going to look at the data and need to make a decision, they will be relying on the visualization a lot till AI completely takes it over.
Mm-hmm. So. I've always been curious about that, just as someone who's been to a lot of hackathons and seen like everywhere the Oculus Rifts, and you're like, all right, what problem does it actually solve? So, thank you.
All right, next question. Yeah, hi, my name is Ashwin Radia. I have a question about the messaging, virtual assistants, intelligent assistants. So Facebook claims there are 100,000 chatbots out there. I went and looked for all the bank chatbots. Many have sort of a spot in there, but if you open a chatbot, it just says hi and nothing else. And you say, how can you help me? Then they give you a number you can call and they can help you. So I think my question is that what is the real status of an interest in the different segments of FinTech? I talked to private banking and they said they have no interest, they don't see any value of these messaging platforms. So the question is, what is the real thing going on out there, and what do you see as the opportunities for intelligent assistance in general and messaging?
Okay, just start off with that. So IBM is really happy with chatbots. We love them, and we always sell them. And so people are probably tired of hearing about the Watson virtual agent, but that's kind of one of our chatbot options. And we're actually seeing a lot of appetite from banks and from a lot of companies who realize the value of customer experience and satisfaction. And Watson really excels compared to other AIs, especially in kind of the speech and the natural language aspect. And that's a perfect domain for the chatbot, because what it can do is identify which words might come across as angry, and it knows the syntax in multiple different languages. So you know when to route an angry chatter customer to a real human, for example. Or it's just setting up a whole work stream, having a lot of logic and decision processes to manage the whole pipeline. Then finally, to bring in the AI side with Watson, you have Watson kind of be able to learn and understand, like any good chatbot, how multiple questions can really be one main question, or then offer a couple different trade-offs. So you want to try to replicate a human experience as much as possible. It's like you're going to a bank, you want to open up a 401k, maybe, but you're not sure exactly what type. Well, it's going to talk you through the trade-offs. So it might ask you to model how much you could spend and input, and you could give a few options and see how that changes the overall model. So I think we can hope for a kind of sophisticated outcome beyond just like hello and then it fails.
Yeah, I guess, coming at least as much from the consumer perspective as the investor perspective, I've got a similar impression of a lot of the chatbots out there, that there's not a ton below the surface. We looked at the space, and I think a lot of the startups that we looked at were basically just glorified decision trees where they send you down some path and it's very canned. We never invested, so I can say that we really never found one that's got true deep learning. Even if you look at Alexa, right? If you ask a question that Alexa doesn't know the answer to, is ingesting that and adding that information back in, and then the next time you ask the question, will it have the right answer? Yeah, no. So, yeah, and that's with Amazon's resources, and arguably like the most widely dispersed chat application that's out there. So I think that there's a long way to go. I think it is helpful for when applied in a human in the loop type fashion. You know, I mean, if you if it's on an IT desk and it's doing a password reset, if you're checking your balance, you know, that's great. It saves money. It's probably more efficient than, you know, you being number 24 in line for to talk to a representative, and that's fine. But I think the ones that we were most interested in were the ones that were doing a scoring probability based on the question, as far as whether they said, you know, can I answer this question with a 95% probability? If not, I'm going to kick it out to a rep. And that's a good experience for the user. It's a good experience for them. You can hypothetically build on that in a linear fashion where you can get, you know, something that, it's not deep learning, but it's at least, you know, an application where you can start compiling the questions that you don't know the answer to and building it in a fairly manual fashion. I think the best one that I've seen so far, other than IBM, was Capital One's pretty sophisticated as far as what they're doing, and I think at least out of their innovation team, they talk about a lot of the sentiment analysis things that are pretty interesting in the space.
I'd like to add to that. So you mentioned that you haven't seen like a lot of real intense use of chatbots. So my take on this is, I think the stage is set. There is a pretty good technology, a lot of work IBM is doing and other companies for chatbot technology, and there's a huge amount of data is available. And as you just heard, like Capital One has done a pretty good job. At Yodlee, we have done a chatbot demonstration, which will completely remove your interaction with a banker. It's basically based on the data we have on you and your past history of all your transactions and all. We have a demonstration where you can completely finish the customer interaction using chatbots and not have to talk with a person there. So my take on this is, I think you are going to see a disruption very soon in this industry. It's probably going to get adoption slower by the big banks, but once some startup demonstrate that it can solve real problems, it will get adopted really fast.
Thank you. All right, we have time. We have time for one quick good question.
And a short answer.
And a short answer. Come on up.
Hi, my name is Saeed, and I'm going to ask a very quick question. I noticed everybody mentioning cryptocurrencies around FinTech. Other than Matthew, nobody mentioned about smart contracts and their usage. So as a co-founder in a smart contract startup that actually came from a capstone project at MIT, I'd be curious to find out how you think, what's the perceived value of smart contract based on the distributed ledger technology, and couple that with AI and machine to machine, and how do you see that taking off and all? But the challenge would be, it has to be a short answer.
So I think smart contracts are key, and they're the way in which contracts are going to be executed and digitized and modernized.
I don't like the word contract, because contract connotes a lot of legal implications, and right now there is no legal framework. Our friend here will tell us all that. I think they're just like smart workflows, and how is it really different from just other code that run on another system? Well, it runs on a blockchain system, so theoretically people can't stop a single blockchain instance from running this particular smart contract. But to me, it comes out, if you haven't figured out a way to put the blockchain into wide circulation, then the smart contract is not going to get utilized.
Can I just disagree really quickly? So you have DocuSign, you have different digital contracts that we're able to like change and kind of replace paper documents. So I think it'll be incremental, but I disagree.
So DocuSign is a signature, right? So DocuSign only said that you agree what's actually written there. Smart contract, by contrast, is actually supposed to make certain calculations, legally binding activities. Let me just add, have any of us ever written bug-free code? So what happens if there's a bug there? Where is the jurisdiction, and who handles that liability? So until all of that really gets sorted, to me, smart contract is just smart workflow, and it's just code that runs on blockchain.
All right. Yeah, that's fair. All right. Thank you.
All right, it's always nice. So it's nice to end on controversy. So let's give it up for our panel. Let's give it up for our great moderator, Nathan Mee.
And for our host, Rob.
Not yet. So let's give it up for our audience. Let's give it up for our sponsors, event partners, and our video team. Give it up for me. That's what I need. So the video will be available on our YouTube channel in a few weeks. You can stick around, talk to our panelists until about 9 o'clock. We'd like to have everyone leave the building at 9. Roundtable Pizza, 1225 El Camino. The next block is open, and if you want to continue the conversation, I can escort everybody there. So thanks for coming, and we'll see you next time.